Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at Bitcoin to see whether this particular pullback is the final hurdle, the final scare before the big moves that we're expecting towards the end of this bull market. So what we're going to do is we're going to build up the narrative for the various time frames, see exactly what the Bitcoin price is telling us, and make head or tail about the short term, the medium term, and the long term. We'll also be looking at Ethereum for the first time. I've had repeated requests for looking at Ethereum. So today I'm going to look at Ethereum, not just on its own, but also as a comparison to how well it possibly will do against Bitcoin in the final stages of the bull market. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. So just continuing from the theme of the last week's video, which I covered here, which was showing an extremely bullish signal playing out, which was the dollar, as well as look at one particular danger. And that particular danger seems to be just playing out a little bit at the moment. So if you're wondering why the price for Bitcoin is actually having a pullback, that was the actual particular worry that I highlighted in last week's video. So what I'm going to do is to continue the theme of developing a particular narrative to see which way the Bitcoin price is heading in the short, medium, and the long term. And as per the title of the video, I'm going to continue that theme from last week by looking at exactly what happened in the last cycle, because what happened in the last cycle is what normally happens towards the end of each of the previous cycles, as we've seen many times before. But as an example, just to show what's happening currently, that the current short-term pullback is nothing to worry about unless we obviously drop out of the ATMA on the monthly time frame. So this is the previous cycle. So this is where it ended the cycle at 69,000. But obviously we had a double top, and if we're going to get a double top type of scenario, then I think we've missed the boat in terms of the time here, because the first top that we got in 2021 was in April. So that was 7 months before the actual top. So there was a 7-month gap, and you usually find with tops there tends to be obviously a time gap. And because we're coming to the final stretches of the current bull market of that 4-year cycle that we've been talking about, and yes, we do have that option that we may get an extended cycle here, but so far we haven't come to the end of the current expected cycle towards the end of 2025. So we still have this period to cover, and anything can happen in this period, because if we have a rapid price move towards October, November, December this year, then we could quite easily get the blow off top and the traditional 4-year cycle. But as I mentioned in the last few videos, if we get a gentle increase into this time period, then the higher probability is for this extended cycle here. But what I want to highlight today is that despite the fact that we may be expecting a big blow off top here, we also always get in between these periods, we always get these big moves to the downside, which is really what Bitcoin is doing in terms of the final hurdle before we reach the top, a final scare to try and shake the weak hands out of the market. So if we have a quick insight into this period here, just to show you the actual pullbacks that we've had in the past. So we can see that before we reach the first top at 64,000, and that was in April 2021, and just 4 months before that, Bitcoin tried to shake the weak hands out over here, and that was a 30% move before this final hurdle. And even a few weeks before the actual 64,000, what we got was this particular downturn, and this was a 25% move only just weeks before the actual top. And even just immediately before the actual 64,000, we got another 17-18% fall before the eventual first top that we got. So you can see quite clearly this is very characteristic of Bitcoin. And in the second half of that, and this theme actually continued until we got to the second top as well. So you can see immediately before the actual top. So we really need to just always be aware, and this is really what Bitcoin is trying to do, is trying to give the false impression along this time that we've topped out, and it's trying to shake the weak hands out of the market. It's just what Bitcoin does, and virtually all markets do the same. So just a few weeks before we topped out at 69, we had this fall here. Up to this point, those 2 weeks candles were nearly a 14% fall, and a little bit before that we got a 24-25% fall. So you can see quite clearly that this is a characteristic pattern that Bitcoin follows even before the eventual top that we're expecting. So the message is that when you see the current prices falling, as we're seeing here, this is the 4-hour chart, and you can see there is a marked decline in the price of Bitcoin. And the main message really is not to panic, not to be shaken out, not to be the weak hands that the Bitcoin price is targeting. And these are just part of the final hurdle, the final scares that Bitcoin goes through before the eventual top that we'll get. So we could well be only 2, 3 or 4 months before the actual eventual top. And these things come just before those big moves to the upside. And the characteristic you'll see with these falls is that when you do have a sudden fall of a few weeks, you get this very big sudden surge upwards as we're getting towards the end times of the bull market. So this one again here, we got a big fall as I've just shown you, and then we got a surge up to this point, then another fall, and then the last surge was here. So every surge is preceded by these small falls to try and shake people out. So this is the pattern that we should be expecting in the next few months with Bitcoin. And what we're seeing here currently is exactly what happened here. We had this fall and then the surge that we got all the way up to the $124,000 mark. And now we're having another one here. And we're going to put this in the context of the 60-day cycle to see the framework in terms of the time when we can expect this to turn around for the big move back up again. So the overall message is to keep calm, keep relaxed, take the bigger picture view, and that these moves here are usually the final hurdles, the final scares that Bitcoin tries to put people through before the big surges that you're going to expect along the way. And as I mentioned in last week's video, the big danger that was lurking in the charts, it doesn't always have to come from the Bitcoin side, because what we know is that the Bitcoin miners sometimes front run Bitcoin and sometimes Bitcoin front runs the miners. And in last month's candle close that we saw with the Bitcoin miners, this was common to many of the Bitcoin miners, and this is represented by Marathon here. We got this shooting star, and it looks to me now that the Bitcoin miners were actually front running the Bitcoin price. So that's why it's very important to take a bigger overall picture of the market and not just focus on Bitcoin itself, because sometimes other related assets are giving you a strong clue. And this often happens with the Bitcoin miners. Many times this has been the case, and we only have to look at this candle here back in July 2024, so exactly a year before this candle. So both Julys in 24 and 25 were predicting a fall in the Bitcoin price. And this one here is the July candle for Marathon, while this candle was the corresponding July 2024 candle for Bitcoin. So you can see this is not a bearish candle, especially towards the end of a declining period here, or consolidation, whatever you want to call it. But this candle itself is a rejection of lower prices. So you would have expected this to go a little bit higher. Whereas the Marathon Digital Holdings monthly candle was front running, along with the other Bitcoin miners, were front running the Bitcoin price. And this is what happened afterwards. The price actually came down for Bitcoin. And this happens time and time again. And this is one of the main reasons why we should keep an eye on the Bitcoin miners to give us some sort of a clue as to where the Bitcoin price is going. And yesterday's weekly close candle was not really what we wanted to see, because last week, what we were seeing here when I was doing the video was that we were punching through this very strong resistance point of 120,000. And at the time, I mentioned that we needed to close above the 123,000 in order for us to continue this trend. And unfortunately, and that 123,000 is going to prove a very strong resistance point, and that we should be expecting some sort of a pullback and possibly a right shoulder on the daily time frame. So what we've ended up with so far is this shooting star candle, which is bearish, of course. It has the power to bring the price down, and this is what's happening. So this week, I would expect some sort of a consolidation here. And the good thing about it at the moment, the only positive, is the fact that the blue line here is the 8 EMA on the weekly time frame. And so far we're finding support right on that 8 EMA. And because of the 4-year cycle time band that we're in, i.e. in the final stages, so far what we've had is a pullback all the way down to that level of about 7%. And as I've shown you, historically, this can quite easily come back to the 21 simple moving average, which is about 15%. So this is not really out of the realms of probability here. So let's see what this happens, but certainly this week I wouldn't be expecting any moves to get above the 120 or even retest the 124. What we are probably going to get is some sort of a consolidation over the next few weeks, and we'll see what the 60-day cycle is saying in relation to the price action. And something that we should all be aware of, and I really don't want to be frightening anybody simply because it's only the 18th of August and we've still got nearly 2 weeks to go, but what we are getting, and something we should be aware of, is the fact that this current monthly candle is not looking very bullish at all. In fact, it's giving the same signal as the marathon chart was in the last month. Obviously, this hasn't closed yet and we've got a lot of price action to go through. But certainly, we don't want to get to the end of this month and end up anywhere around the 115, 116 mark. We really want this to be challenging the 120 and turn this into a green candle. And one of our signals for the end of the bull market is this blue line here, the 8 EMA on the monthly time frame. And this line at the moment is at around about the 102,000. So as long as we're above this line, we are still in the trajectory towards the upside. But we can quite easily get a rundown into the 102,000, and from where we are at 115,000 currently as I'm doing this video to the blue line at the moment would be a further 11%. So from the 124,000 down to that 102,000 would be around about an 18%. So as we've seen in previous cycles, 20 to 30% is quite normal and not something to panic about. The time to panic would be if we saw the monthly candle close below the 8 EMA. That would be the cause for concern. But up to that point, we're still in the trajectory for the upside. And as I've shown you on the weekly time frame, we got this candle here very similarly back in July. And what we saw there was the consolidation back to the 8 EMA. And suddenly we're getting that same candle one more time and we're back to the 8 EMA. But this time we could actually fall back to the 21 simple moving average on the daily time frame. And that would be at around about the 106,000. So just looking at some of the possibilities, but the overall general message here is that with this bearish candle, we are going to get a period of between 1 to 3 weeks at least of a downturn or a consolidation in this range, down to at this level here at 111,000. And if we look at the Bitcoin price through the eyes of the 60-day cycle, this gives us a time frame as to when we can expect Bitcoin to reverse and turn around, because currently in terms of the 60-day cycle, we are on day 15 of this cycle. So we're halfway there to the midpoint, which is the 30 days, and the 60-day cycle should end around about the first week of October. So this is the time frame that we've got for the current 60-day cycle. The cycle started here and the low of that was at 111,900. And this is the beauty about these time frames. What we shouldn't be expecting now is to close below this 111,900. So this is a very strong support line. But as we saw in the last cycle, we started the cycle here and then on day 4 we topped out and we got an early decline into the midpoint. So we normally expect a midpoint decline, and what we normally would get is a run up into the midpoint, and in the last 10 days or so you expect that decline into the midpoint before the next leg to make the right translated cycle. But the current cycle seems to be following the same pattern as the previous cycle here, and that is that we're making an early top. This was a 4-day top, and this one in the current cycle at 124,000 was an 11-day top. So we would have expected a continuation here and the decline to come at this point. So what we're getting is an early decline in the cycle. But just like over here, even though we fell below the previous low of the cycle where the cycle started, even though we protruded below it, you can see quite clearly we didn't close below that. So the 60-day cycle was well intact, and I know many people interpret this as a failed cycle, and as I mentioned at the time, my interpretations are a little bit different. I'll always give the price the benefit of the doubt, especially in the time band that we're at the end of the 4-year cycle. You would expect a lot more bullishness and for this to happen much more frequently. So at the beginning of a 4-year cycle, you could expect that to be a failed cycle, i.e. for this not to get above the high here after the midpoint. You would expect this to then fizzle down. But at the time band that we're at, you would expect this to continue. And this is exactly what happened the last time in the last cycle here. And the reason I'm showing you the last cycle here is to give you a balanced view of what can happen here, not to panic, that this fall is very similar to what happened here. And what we got in the previous cycle was a big surge in the price all the way up to the new all-time high of 123,000. So this could well follow the same trajectory. We could come back to the 111, retest that, or even protrude a little bit below it. But as long as we don't close the daily candle below that 111,900, then we could well be good to go. So in the previous cycle, we had a surge into the midpoint, but even at the midpoint, we still got some consolidation. This is what you would expect. So we could get a surge back into the midpoint. And then after the midpoint, we got the right translated cycle. So you can see how Bitcoin plays a lot of tricks. And that's why it's very important to know all the patterns, the fractals, the historical context of Bitcoin, and put everything like this fall that we're getting now into context. And the reason why my own probability says that this is a short-term view in terms of the decline, and that we should start making inroads into bigger prices coming up, especially in the second half of this current cycle between September and October. Because as I said in last week's video, when I showed you the highly bullish picture from the dollar, what we've been getting, if you look at these averages on the weekly time frame, it gives you a very strong picture that as soon as we fell out of this 8 EMA and the 21 simple moving average, we've been finding resistance on the 8 EMA all the way down here, resistance again, and resistance all the way here. But once we got through, the dollar found resistance on the 21 simple moving average one more time there. And last week, after the video, we closed the last week on another bearish looking candle. So from the dollar's point of view, from a liquidity point of view, we can expect this to be going down, and this obviously has an inverse relationship with the markets. As there's more liquidity in the market, we would expect the general markets like the Dow Jones, the Nasdaq, the SPX and Bitcoin to be doing the opposite. So from the dollar's point of view, we are still in a bullish trend to the upside. And we also have the little matter of the interest rates being cut on the 17th of September, when there's the next FOMC Federal Reserve meeting. And at the moment, the current rate is at 425 to 450, and we're expecting 84.8% probability of that to be cut down to 4.0 to 4.25. And depending on the data that we get between now and the 17th of September, there is some quiet talk that we could end up, instead of a 25 basis points cut, we could quite easily have a 50 basis points cut, which would send the markets to much, much higher levels. And it's only a matter of time that the European interest rates, which are much lower than the USA interest rates, it seems only a matter of time before the USA comes in line with the European interest rates. And what's really holding up the USA interest rates falling much further is that there was an expectation or a complication of the Fed's task regarding tariff data, which doesn't seem to have actually filtered through yet and may not do so. So one would expect that once there is confidence that the tariff data isn't going to show adversely in the CPI data, then the chances are that the Fed will probably, more than likely, reduce the interest rates very, very quickly going forward. And we could start that in September. And that fits in nicely with the 4-year cycle. As the interest rates are coming down, we would expect the price for Bitcoin to be going up. So what I've shown you here today is the shorter term picture. We can expect this to further fall, maybe into the 111 or even protrude a little bit lower than that. Even hitting the 200 simple moving average would be actually quite fine without losing the structure of the charts. Obviously, that would mean a failed cycle. So the overall picture is that we're going to have some sort of a short-term decline here, but expect some sort of a surge from these levels, either from about 111,000 or protruding below that. This is a lower probability play to come back down to the 100,000. It's a possibility, but a low probability. So this is what I would be expecting, a little bit similar to what happened in the previous cycle, a surge into the midpoint, maybe consolidate somewhere around here, and then have another big move to make the new all-time high in the second half of the cycle. And that would take us to October at this point. And then obviously we know that the previous 3 cycles in November in 2013, December 2017 and November 2021. So the next 60-day cycle becomes even more critical than the current one, where you'd be right in the band where you would expect a blow off top. So this is where you're going to see some real fireworks wherever this is going to go to. And if we don't get these fireworks from October to November and December, then that would be the very strong clue that this is going to be an extended cycle into 2026. Okay, so we're going to leave Bitcoin there, and I'm going to have a look at the Ethereum chart along with the Ethereum against the Bitcoin chart. And as we've seen in the last few months, we've actually seen a surge of the Ethereum price from down here to the recent high that we made of about a 241%. And what people who are not looking at the charts are actually forgetting, and they're diving into the Ethereum price here, because all they're hearing is the Ethereum treasuries from various companies, and it's really sucked a lot of people into this big surge. And my private members will know I really don't like following these prices up. Either you catch it down here or you just leave the price alone. So what I'm going to tell you is that in the short term, a little bit like Bitcoin, what we're going to be looking at is some sort of a pullback here, because quite clearly on the chart you can see that this level here at around 4,500 is a resistance point at many points so far. At these points we didn't even get to the 4.5. So the fact that we've gone straight into this for the first time after 4 years after the all-time high. So this is not only just the all-time high that we're finding resistance, but also the fact that we're coming up to it for the first time in 4 years. So there is a high probability of this pulling back. And the 8 EMA at the moment is at 3,124. So while it may not pull back to those levels, this is a rising average. So it would make sense for it to come back and retest that 8 EMA. However, being in the time band of the final stages of the bull market, we may only get a shallow decline. That would be to the tops of these candles here. So you would expect at least coming back down to the 4,000 level from the current 4,250, or even testing the low of this candle, which is around about 3,300. So this is where I see the price now coming back for Ethereum, either back to 4,000 or down to 3,300, and then you'd see an attempt back up and maybe break above the previous all-time high from November 2021. So it may not be what you want to hear, because everybody's got interested because of this big surge. And when you get a big surge, everybody's expecting this to happen, but the charts are telling you a different story. So I'm sorry I'm not giving you what you want to hear. My job is to give you a balanced view of what I see. But when you look at this on the weekly time frame, this is incredibly bullish, because what you're seeing here is that right at this neckline of that 4,500, what you're seeing is a left shoulder, a head, and a right shoulder. This is a classic inverse head and shoulders pattern. So while you might get a small pullback here, the longer term picture is for this to break to the upside. And the upside position here would be from the neckline here in November 2021 to the low here, which was at $870 in the bear market. The targets that I would be looking at would be the 1.272, which is at 7,700, the 1.414, at 9,900. This would seem like a very good target because it's right into a round whole figure of 10,000. So this looks like a realistic figure. It may not be in this cycle, maybe at the next cycle, but certainly it's aiming for that. And of course the 61.8 is at 14,000. So these are the three targets. The highest probable one is obviously 7,700. And this has a good probability to be hit in this cycle if we can just get above this very strong neckline of 4,500. And in comparison to Bitcoin, what you're seeing is actually a bearish development here, because while the price has actually had a big surge against Bitcoin and everybody's jumping on board, this is where these markets will punish you, because the chances are what we've done is we found resistance right on the 21 simple moving average on the monthly time frame. And this is what happened here back in 2020 when you saw a pullback of all the way down by around about nearly 30%. And what this is giving you is a clue of what may possibly happen. I would say with quite a high degree of probability, we're going to see some sort of a 50% or 61.8 Fibonacci retracement here. Because if you go back to 2020, from this point to where it hit the 21 simple moving average, you can see that the price came all the way back down to the 61.8 before the big surge, and then had another fall because another big surge, etc. So in the final 12 months, you do get these big falls followed by big surges along the way. So once this comes back down, I'm not saying it's going to be 61.8, it could be a 50% Fibonacci level, which would be from here up to the 21 simple moving average. And please remember, this is against Bitcoin. So this is a ratio chart against Bitcoin. As you can see, the current ratio is 0.22, and we could see an underperformance of Ethereum down to the 50% Fibonacci level, which would be 31%. And down to the 61.8 would be around about the 40% underperformance. So the chart would be telling me that if I had a choice between Ethereum and Bitcoin, obviously Ethereum has outperformed Bitcoin here by over 120%, but this is looking overbought, and the RSI is coming right into the 50% level where you would expect some sort of a consolidation or even a decline. So I would expect with a higher probability for this to fall and for Bitcoin to outperform Ethereum by anywhere around 20, 30 or 40%. And if you do like this kind of an analysis where I give a bigger overall picture for both Bitcoin and the Bitcoin miners, you can see from the various titles, from the members only videos that we've got here, you can see from the titles the type of things that we cover in the private section. And also on a daily basis, what we do is a market update at the end of each closing session, Monday to Friday, so you have the heartbeat of exactly what's going on, not only with Bitcoin, but also with the Bitcoin miners. The two are interrelated, and many times one actually front runs the other market. So therefore it's very important to have that overall bigger picture. And in these times where we're coming to the end of the 4-year cycle, information is key in order to make the best informed decisions you can. So you can see from the previous market updates that we've done, I post quite a lot of charts as well as articles, as well as some personal development stuff that we do in order to train the mindset to make the best decisions we possibly can for ourselves. And if that's the kind of thing you're interested in, and if you're interested in that type of information and you want to join the Bitcoin private member section here, then all you have to do is go below any of my videos, and you'll see that below all of my videos there's a join button, as well as in the description box there's another join link here which says Bitcoin Miners Membership Join Link. If you're on a handheld device, then this join button may not be shown there, so you would have to go into the description box and click on this button here. So when you click on this button, which tells you that to join the private member section for the price of a coffee per week at £12.99, you can have access to 2 extra videos that we do on the Wednesday and the Friday, on top of the one that we do here on the Monday for the general subscribers. But you'll also get an in-depth analysis of the Bitcoin miners as well, along with Bitcoin. Now, if you try to join on a handheld device, the price you see here may be a little bit different because Apple put their own fees on top of this, which has nothing to do with me. So if you want to join, it's better to join on a desktop where the price is always going to be £12.99. So if you think that the price of a coffee per week is worth all that extra information, you can join the growing band of members on the private member section. And as you can see quite clearly here, you can cancel at any time. There's no obligation to stay there. Many people just try us for a month. The majority tend to stay there as long-term private members, but for a minority it may not be what you're looking for, but at least you can have a look at exactly what we do and make up your own mind. Okay, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.